Good morning and welcome to first daily update of the week from Currency Index. Last week has seen the pound do very well, particularly late on in the week after the Governor of the Bank of England, Mark Carney, announced that interest rate rises this year were likely now, following the UK's economic performance and the upturn in our fortunes there. So we have a very strong pound, multi-year highs across the board, and things looking pretty rosy on that front. The euro's struggling quite a bit at the moment. The dollar's able to capitalise a little bit on that, so dollar's winning the race out of those two, but still very much failing versus the pound, which is very strong indeed. This week ahead is a very busy one on the markets. It's the week of the month where we hear an awful lot about inflation. All of the key inflation figures are coming out across all of the major zones. Inflation is obviously a very important one when it comes to interest rate decisions. Interest rates are one of the key things used to control inflation, so this could give us a bit of an indication on what the central banks are going to do with their interest rates, which obviously is a very critical thing. A stronger or higher interest rate generally leads to a stronger currency as investors come and take the yield from that interest rate. So that will apply in the UK, less so in Europe. Obviously we've seen that they've dropped their interest rate recently. The US, unlikely to make any changes to their interest rate in the short term, but the Fed's making their policy decision this week on Wednesday, and we can expect investors and analysts to be keeping a very close eye on what Janet Yellen has to say. They'd love to be able to talk about interest rate rises and positives, but the US economy is still very frail, so unlikely to see any of that soon, but if there's any indications of it coming up later in the year, then that's a possibility. Please do take a look at our website for a bit more information on the actual data releases as they come out, and obviously stay in close touch with your CI account manager. With rates so high, it's very easy to think that your upcoming currency requirement, if you're starting with sterling and buying another currency, is in the bag, and that you've automatically got a great exchange rate. But the downside risk is, when you see a big spike as we have at the moment, the downside risk is an awful lot more than the chance of any further gains. It only takes a tiny piece of data coming out slightly negatively and you could easily see the rates drop back down. So stay in close touch with us and we'll be able to keep you informed and up to date with everything that's going on. We'll see you again later in the week.